Welcome everybody to the August market update. This is David Keyte with Bend Relo at EXP. We are going to get right into what I think is the most important graphic on this whole presentation, and that's the last 3 months of sale price, list price ratios, okay? And it's broken down by which month the home closes. So if it's in the first 30 days, that's almost 60% of the listings that closed go pending in the first month. Right, that's pretty good. And the original list price to the sale price ratio is 99.3%. Now, if that home is going pending the first week, it's going to usually be 100% of the list price, right? But weeks 2, 3, and 4, we're getting average right around just above 99% of that asking price. So first month is hot. Second month, you're looking at about a 5% discount if the home makes it to the second month. So this is all really important for both sellers and buyers to be aware of. And then as you get down the line into months 3, 4, and 5, the discount extends up to 11% on average. Keep in mind, some of these homes have a 20% discount to their original list price, and others have, more like a 6 or 7. So it's just important to realize where the home was priced in relationship to where it's going to actually transact. Not pictured on this chart is the homes that listed and canceled, right? And that is actually about a third of listings are failed listings right now. So it's very important to know, are we dealing with a listing that's going to fail? Are we dealing with a listing that's in months 2 to 5 going to close still? Or is it a hot one in the first month? These are 3 completely different worlds to operate in. So it's important to be working with somebody who's able to share that data with you for your price point and in the neighborhoods you're looking at. MLS data, I think this is really interesting. These are the active listings on the MLS in Bend, single family homes. Got a lot to choose from. It's pretty good. This number shrinks typically into January. Around 400 homes will be for sale. If it was like last year, of the homes that are listed, over half have changed price, and the average price change is coming up on almost 6%. And then you can see the days on market for active homes is going up, which is seasonally what we expect here as the June market. The spring market has sort of passed. Now that we're in the summer market, interestingly, things are still ripping. So prices are up, closings down slightly, but still really good closing month. And then days on market is starting to tick back up as we see seasonally. If we zoom in, this is so fascinating. Look at this, 187 closings in July. That is the highest closing month we've seen in 3 years besides June, right? So the market is ripping in Bend. That's pent-up demand. These are sellers and buyers that have been waiting for years to transact, getting it done. Now we do expect this to taper off, but the question is how does it taper off? Like in years past, last year, we saw it kind of start to go down more like in October, which was still considered a busy month, and then November, December, January, February is like pretty much a dead zone, but there are deals to be had during those markets, just not as much to choose from. Here's your days on market chart, looking very seasonal as it starts to pick back up for these summer doldrums. You can see last year it went up from July into October in the high 60s. So things are starting to slow down, which is nice for buyers. Give you some time to shop. However, it is also of interest that the homes that actually sell usually sell in the first month. So you kind of have to be quick unless you're dealing with a home that's been on the market for a while. Here's the prices. This is median home price, and it's just sort of been range bound, 700 to 800 for 3 years. It's basically flat. Depends how you bought the home, if you got a good deal or not. Did you buy it in January or in June? So most people who have purchased in the last 3 to 4 years are kind of at a break even, not including their transaction costs. And sometimes you might be minus 5% or minus 10% from where you bought it. Other times you might be up a little. So definitely it's been a fairly flat price market for quite some time. And that sort of checks with the interest rate chart, because here's a good look back to January of 23, right? This is right when rates started going up in 22. We're pretty much at a 6% interest rate, everybody. It's historically, this is where we've been. Rates have gone up in the last month or two, but still not substantially. It's just the new normal. It is what it is, and people are still transacting. It's interesting to see how sellers are adjusting their asking prices now. They're starting to learn, right? And their asking prices are coming in more reasonable, and that is part of what's helping move this market along. Is that the homes that are selling are asking more reasonable, down to earth prices, and then the ones that aren't are adding 10-20% to what buyers would consider reasonable. Mortgage rates are expected to stay stable, and this is kind of this is what it is, right? If they go down, everyone knows things are going to really crank. Right now, they're not expected to go down or up, really. It's just sort of going to be range bound for as long as we can guess into the future. So it's really more about, instead of when are rates going to move, it's like, well, when are you going to move? When are we going to move? What's the best for our family? Not so much timing the interest rates or the seasonality. So bottom line, things are booming, especially if you're working with the right advisors. Don't listen to the YouTube doomers who are saying everything's crashing. It really isn't. People are transacting out there. It's important to focus not so much on the market timing. It's not timing the market, it's time in the market. And so, if you're owning a home for 10, 20-year horizon, it's always a good time to buy. Now, if you're planning on, I'm going to buy a home in Bend and then leave in a year, or if it's a temporary thing, it's not as. If it's a temporary move, you're definitely better off renting. But if your time horizon is, 4 to 10 years, it's always better to build your own equity versus your landlord's. Move when it's right for your family and not based on the interest rates, not based on seasonality. If you talk to your lender and you can afford the payment and you're comfortable, it's the right thing for your family. It doesn't matter whether it's November or January or June. It's really more about what's best for your family and your needs. So if you or anyone you know is looking to consult on your real estate goals, myself or any Bend Relo team member will be happy to help.